All right, so Tim, a lot of action going on. We're talking about trade. One that we're expecting to see perhaps later today is a deal with the UK. How does that influence your view when it comes to international trading right now, or international investing, I should say, specifically in the UK and Europe?
Well, on some level, the trade tariff dynamic and the backdrop we've had has made international investing probably more interesting. And I think, to the extent that fund flows and some of the dynamics that are a little more technical here rather than the fundamental have totally supported international, and it probably supported international the more the earlier moments we started getting some understanding of Trump tariff policy. And, look at the outperformance of Germany going all the way back to Thanksgiving. Really, the irony, of course, is this has been a make international great again moment. It really has been. I mean, Germany's outperformed the U.S. by 35%. All the dynamics around trade tariffs and uncertainty, Tina talked about uncertainty. I think that uncertainty helps international investing. It's also inspired some of the, call it, historic change that we've seen across Europe, especially Germany, using that example again in terms of fiscal spending, fiscal deficit spending, rearming Europe, the dynamics for the currencies around the world, but again, across, euro and even yen. I mean, a lot of this has been inspired by tariffs. That's made investing internationally, I think, a lot more interesting. There's no question that investing internationally for many U.S. investors is something that they're not as comfortable with, they're not as experienced in. But I think you've got a confluence of events that have made international investing fascinating and probably never more interesting, and the charts bear that out.
All right, so you got your own acronym, by the way, Tim, MEGA, Make International Great Again. As we're looking at it, when we're seeing potential trade deals with Japan and India that could potentially be signed, but at the same time, seeing some tension between Pakistan and also India, where do you see the most attractive opportunities when we're looking at different nations for investing, especially for people that might have some trepidation about stepping outside the U.S.?
So look, we like India. I manage an international ETF, IDVO, which is an enhanced dividend international play, and it's a way to invest internationally with companies that are growing their free cash flow yields. We like India. I mean, we have exposure to India. I think Japan is a place that we've tended to be overweight for the last 6 to 9 months. And you look at Japanese banks, they pay higher divs. They trade at a discount even to European banks, which trade at a discount to U.S. banks. I think what we heard from the recent Bank of Japan policy meeting on May 1st is that they're probably in the dovish mode again, big surprise. But I think some of the yen appreciation, which has not been great for Japanese banks, is something that may be more on pause. But what you see in Japan are corporate governance changes over the years that are particularly beneficial to investing in their banks. The free cash flow yields are better, the dividend yields are better, the buybacks are better. And so I like Japan. I look at India right now is never been, I would just say cross-border clashes. This is not the first one. It's from a human nature perspective, it's a scary time. But
certainly a lot of tensions between those two nations, Tim. I don't mean to cut you off, but I got to get to what may be one of the biggest things when we're looking at international investing, the fact that the U.S. and China are having trade talks over the weekend. How do those talks influence the MEGA trade right now? The idea that we could potentially see a deal, or maybe we could see continued tensions between the U.S. and China. What does that benefit? What does that hurt?
I don't think investors should be investing based upon expectations of a deal. I do think that this olive branch around fentanyl is something that's important, probably for both sides. I'm not sure we're going to get a substantive deal, but I do think that the worst of the tariff headlines are behind us. It doesn't mean that the impact from tariffs, especially for the U.S. economy and other economies around the world, aren't things that are still to play out. I think investing in China, we've been selective in investing in China. We don't have to own China, but I think owning some of the mega cap China tech companies like Alibaba has been the right thing to do. And I think valuation wise, again, if you look at someone like Alibaba, they're not necessarily exposed on the international trade front in the same way that you might expect them to be. So these are important headlines, Frank, but I'm not sure that we're expecting a whole lot, and it doesn't really change how we're investing internationally.